Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, my lighting is not on yet, but let's just get to the charts real quick. We only have a few minutes here. We do have rollover in oil today, or so says Ninja Trader. All right, coming over here. We had quite a bit of a doozy down move yesterday that quite surprised me. We did come back, like this was like the initial move, and then almost all this stuff that we were fighting over during the session unwound, and we're a tiny bit higher. We're hanging out at 115 again. All right, so S&P 500. Hold on a second. We're about to get housing starts and building permits, by the way. So ES in the range too. Most of the markets still kind of, we're doing stuff. Gold and silver don't look too great because, of course, the treasuries. But hey, treasury market, the one that really moved, and the rest of the market's kind of sideways. Although there are some concerns. Another flow I want to point out is that there was a really big options trade yesterday that people are pointing out. So, all right, let me fix this light here. Got about 10 seconds here. Okay, so it looks like the housing starts numbers coming in line. Building permits a little bit under the expectation. So US housing starts change month over month up 2.2%. Versus an expected negative 1.4%. So did I do something? Is it not plugged in? That's better. All right, so not seeing too much of a shift in the market off of that number, though. And we don't really have anything. Well, we got a 20-year bond. 20-year bond auction today. But we may be in for a quiet start of the session again today. Let's see. Although there is decent amounts of volume trading through here. Well, see a little bit of downside in the S&P 500. And I would say the volume in the treasuries is okay, but it's not really moving anywhere. So this is kind of looking like it could be a quiet day. Miss Valerie, that's a name I don't recognize. Welcome. How's it going? Your first time on the stream, or am I just not paying attention? Well, let's hop around the interwebs. Let's see if there's anything interesting going on. Oh, was that I saw this little snippet from an interview with Elon Musk yesterday, and I didn't realize that was like a brand new thing where he said, I'll say what I want, and if the consequence is losing money, so be it. Oh, we have chatted before? Oh, okay, from your French. I always, I keep forgetting that a really big portion of my audience is from the EU. No, not a lot of the Americans are willing to wake up this early. Isn't he killer? I don't know. It was really oh, you're an American living well, yeah, but still you're in Europe, right? So it's afternoon over there. No, Elon is kind of a weird guy, like he sits there like and pauses for like 5 minutes. Well, not 5 minutes, but I mean, he pauses for quite some time, right? And then he kind of shares an antidote that is not like, doesn't really hit for me at least. And he's just like, I'm gonna say what I get. It was like he paused, and then the answer that he comes up with is not like all that great or profound. I was kind of like, okay, because if it was me, hey, say I'm Elon Musk, I would be like, I think that it's a good thing that the people can hear from the world's richest person, for better or for worse. And I don't think that it's a good thing that many people are compelled to be quiet because they're concerned about what other people might think and the effect that might have on their business. I don't think that that's a good thing for the society overall, right? I think the good thing for the society would be for people to be tolerant of other people's opinions and to be willing to support other people's businesses and endeavors regardless of whether or not they agree with all of their opinions. That's the thing that needs to be said, because there's this group of people that they believe that punishing people for their opinions is the way that they get what they want. And it doesn't work that way, right? People still believe the same things that they believe. They just kind of keep it quiet, and then we don't get to have the discourse and actually come to like good conclusions, right? It seems that these days, you notice that like policy wise, we were talking about this yesterday, right? In the Republican Party is the weakest in policy that it's ever been, just because you don't have a lot of people out there talking policy. Okay, so now we're getting some movement here. Okay. That dropped awfully quick. I'm not gonna read that one and stuff. Oh man. But no, the Republican Party, you don't have a whole lot of people talking about policy. And I think part of it is that, like, if you say anything and then you piss off a certain group of people on the internet and then they don't want to listen to you anymore. So it's kind of turned into, don't say anything specific, you know? Like, you can get on the internet and you can kowtow to your audience and tell them all the things that they want, but you can never actually do anything too serious. You can't ever give a proposal that would, you know, like, actually be realistic, you know, have a realistic chance of getting passed and actually address the problems, because then a certain group of people won't like it, right? So you have to, all of the content just has to be like brainwashed mush. I think that the GOP has kind of suffered from this a little bit more than the left. The left kind of takes it to the other extreme, which is like, they don't have serious policy. They have extremist policy. And they seem to be trying to put that extremist policy into play, and that doesn't work very well either, right? But I take this all back to boycott culture. That if you say something that we don't like, then we're gonna hold your feet to the fire and hold your business hostage and everything. I'm not saying that boycotts in general are bad, but, you know, like, to boycott Elon Musk's company because you don't like his opinion, I think that's the wrong direction for society, right? That's what I would say if I was Elon, right? But instead, he's just like, oh, I'm gonna say what I want to say, and if I lose money, whatever, I don't care. Okay. But it doesn't really answer the question as to why you feel compelled to speak. That's why I feel compelled to speak. Because ultimately, I feel like that if everybody speaks, we're better off. I don't think we're better now than we were 10 years ago. Because 10 years ago, people weren't afraid to talk. You know? I don't know. I kind of looked at that. Well, I'm still kind of eyeing it. It kind of just stopped right there. I think it was moving with the Japanese yen, though. What is going on with the yen and the dollar? Wow, the dollar's so strong. 102.8, I didn't realize. And I've glossed over that one a little bit too quickly, didn't I? Well, it's telling me if I want to ride 353. Cumulative delta divergence on ES. It would be very, very careful with that sort of a trade on the S&P 500, especially pre-market, because ES is much more of a derivative than other instruments. And so you really have to be able to tell the situations when it is really the volume in the futures that is driving things. Almost all price action in the treasury market originates from either the treasuries or from a currency. In ES, it's like very different, right? Price action happens in or originates in many different places. So for me, actually seeing a delta divergence is like a signal for me to stay out of the market, right? I want to go when price, volume are together, market orders are driving the market. That's when I'm interested, right? Or when I think that that's going to be the situation, right? I try to be very, because I don't want to like influence people's trades or anything like that, right? And everything that I'm giving, it has to be general advice to the public, right? Like if I was, what would be considered financial advice is if I was like, well, okay, but Like, tell me a bit about yourself. Okay, here's everything that we know, and here's some advice like specific to you and your strategy and your financial goals and your specific situation. Right? Like, I can't do that, right? That would be financial advice. I can just kind of give general advice. The general advice is I don't like it when there's a divergence. I find that trades are not as consistent when there's a divergence, which I know is very contrary to what the retail traders talk about, but you say it's a buy? Why buy? Especially after that blow we had to the downside. I mean, I'd say it's still very tepid, but that happened awfully quickly, you know? That's enough. I have a hard time wanting to just straight up bet against it. I don't know. So let's try and review what order flows do we know about. Well, so for one, I think that we had pretty strong order flows selling yesterday, and you could see some continuation of those flows today, right? Number two is there is a 20-year auction today. Number three is that we did have some economic news, but those were pretty close to in line with the numbers. We don't seem to be any flows coming from that, so I think that we can kind of ignore that one. We don't have any Fed speakers today, do we? That I know of, at least. It is a Wednesday. You tend to see a lot of flows on Wednesdays. There's the debt ceiling issue. So it sounds like that Biden has given in on the debt ceiling and that they are now actually, quote unquote, negotiating. So that could maybe bring you some buying into the treasuries, huh? Well, actually, I'm not sure if that one's a buy or a sell. I think like the whole thing was that on the debt ceiling, the initial move is likely to be up on like flight to safety risk. Now on the flight to safety risk type of flows, we could get those today. I would say that the S&P 500 futures are doing okay in the overnight, but it's kind of like a retracement, and there's definitely the possibility of it turning down. Although I think I'm leaning more to the buy side on the S&P 500. Gamma flow should still be strong today. Yeah. And I don't 100% know what's been going on with it in ES. I think that in ES that they're still kind of it's stuck. Yeah. So that's another way that we could take it, is that the flows are likely to continue being short volatility. You know, like yesterday we was kind of giving us a hint that the current market regime was changing. But sometimes, you know, it's just like a flash in the pan. And the overwhelming, especially on Monday, for instance, on Monday we really played the mean reversion kind of plays, and it was good. I'm reading a long comment on Discord. So I'm gonna try reading this, even though I don't 100% know what they were even talking about or where it comes from. I'm thinking maybe stock publication was a bad idea, considering all the postmodern problems it has allowed major banks and firms to play monopoly with life, and all things that matter to average people are just seen as tools of manipulation and means of facilitating mindless consumerism. Well, I don't know if banks play monopoly with life per se. There is a leftist tilt, but a lot of their promises and things they virtue signal are just used as tools as well, and they don't care about any traditionalism, race relations, culture, or anything at all. And I think the left may have a point that a system centered around money creates a soulless environment like this. And I don't think that that's what the deal is. I don't know what the solution is, though. I mean, on a basic level, certain rights should be enforced and upheld, but with all the planned cohesive action, there is a tilt in mass that don't even champion such values anymore at all. Separation of corporation and state must happen. A greater regulation and restriction must exist for banks and relations between other institutions of power. An alternative to the client-server model that moves towards an inherent decentralization should happen under some strict legislation extending basic human rights to the internet space. I do think that should happen. Those are just some things, but even as good ideas as they may seem, they still seem as though they're band-aids for a much bigger problem. What are your guys' thoughts on this? I do think Marshall Brand is right in that current Western hegemonic power is the worst and most formidable forces we've encountered, so solutions probably aren't black and white, empty talking points. So what is the answer? Well, so the issue that I think that comes into this is a fundamental misunderstanding among the American public about where the problems actually lie. The American left has done an extremely effective job of trying to pin all problems on capitalism and the pursuit of profit. But I would disagree vehemently with that assertion. I think that in general, a capitalist market encourages cooperation. It's kind of this interesting tension between cooperation and competition that really ends up creating the best outcomes for everyone. So where is the problem? The problem is the politics, or rather the politicians. Right? The politicians don't have to compete. The politicians get privilege and abuse that privilege at every turn. Right? And they then use that privilege to help their buddy at corporations tilt the system. Right? So if there's a problem, I think it lies in the political sphere, and I think that you have to have political corruption reform in Congress, right? I think one of the first pieces that I would support, first piece of legislation that I would support, is that becoming a politician forever bars you from working in the lobbying industry afterwards. In fact, I think that it should forever. I think that being in Congress should severely limit your current and future business opportunities, because what happens is they will come in and get tight with lobbyists so that after they're out of office, they get a cushy job as a lobbyist, for instance, right? Or politicians in general, they just they make so much money. They are not just living on the congressional salary. Most of them are getting rich through other means, right? That needs to stop. I say like double the amount that Congress gets and then cut off all other sources of income for them, so that they truly become, for the rest of their lives, public servants, right? That's where the problem is. The second problem is that the public has lost control of public companies, right? The introduction of the 401k kind of screwed the market up. Does not work the way that it did in the 70s. You know, shareholders have very little. I mean, there's activist investors. There are certain big guys that can come in and they can kind of affect a company like that. But there's not a situation where, like, you know, a company is doing something that is bad for the community, and then the community votes at the shareholder meeting to stop doing that behavior or whatever the deal is. Like, it doesn't work that way because people don't own individual stocks anymore. They all own it through their 401k. And so it's the owner of, or you know, it's the managers at BlackRock that make all of these decisions. And the managers at BlackRock are pushing agendas at companies that are at odds with what the American public actually wants. And so they're not public companies anymore, right? That's the other problem. Right? If you construct a system correctly, it will create the right incentives, and people will do the things that they need to do. So this idea that, like, the pursuit of profit is like the ultimate problem with art, it's not that. It's that we built all of these other systems on top of it that create perverse incentives, right? That's why it's so important for us to understand systems, because in order to solve these problems, we're going to have to adjust our systems. You know, like I'm saying, the system that we use for people to invest their money is wrong. I think that instead of only allowing people to invest tax-free through their 401k, where they basically can only buy index funds, that people should be able to make any kind of investment that they want, and it's tax-free up to a certain amount. Like you can, as long as your investments are less than $250,000 a year, you're not taxed on it, right? So that people are encouraged. And I think this does two things. One, you know, it creates an incentive to buy individual stocks, right? And maybe we even create an extra incentive to do that, like maybe a tax on index funds or something like that, right? So that people are encouraged to go and spend their, you know, invest their own money. But then the other side of that is that then you open up the possibility for people to do like micro investing, right? Where anybody can go and create a company and have a small micro company out there that people can invest in and benefit from the profits, right? In other words, modernize our securities registration process so that it's much easier for small companies to register a security, so that we can have a micro investing economy. Because as we move more towards this world of hyper efficiency, I think that it probably means you have more small businesses. You have more people working for themselves, because the corporations won't need as many people, right? If the corporations don't need as many people because the AI is so efficient, then the end result is going to be more companies. We need Rand Paul. I only just now saw that. Do you think that he's going to run for president again? Because I was kind of under the impression that he was so disappointed with his performance last time around that he just give up. And well, actually, I don't think he's going to. I think that if Donald Trump is running, that Rand Paul doesn't. In fact, I'm not even sure if Ted Cruz will run. I wonder if there's been any discussion of that. Will Ted Cruz run for president? Texas Senator Ted Cruz won't run for president in 2024 and will only seek a third term. That was February. Wonder, are there any politicians that are running that I am unaware of? Check your DMs. Oh, did you really? He's like at the very front of the queue and was not filled. That is a bum deal. Wait, what is the on this thing here, you've got another volume profile over here that's kind of got like overlaid profiles or something. What's that? That seems like the bid and ask. No. The bid and ask profile columns, but like overlaid on top of each other. That's the alert column. Oh, really? Wait, so if I come over here into the alert column, is there... Oh. Order overview depth histogram. Order overview snapshot histogram. Interesting. How long has that been there? Well, that's kind of interesting. You have to have the first one on for the second one to do anything. Has that been there from the beginning? I didn't know. Yeah, the snapshot one doesn't display unless it's on. So that means that there was a reasonably large, relatively speaking, a large stack at 01 last uptick, yeah. I don't like, you know what, I don't like it because I can't get an idea of actually how many it was. So I feel like it messes me up. Interesting. Never noticed that before. No, that has definitely not been there from the beginning. Yeah, that's what your depth tape is for. Yeah. No, from the very beginning, you know, like from 2016, like back when it was even like it was only an add-on in NinjaTrader. No way. No. Well, there actually are a ton of long shots. Declared. They had that before they did the merge snapshot column option. Okay, there you go. That would I can accept that. That's still a long time that has been in there that I didn't know about it. No. Might be one of those things though that like I did see it when it came out and I was like, well, I'm not gonna use that. You know, There's lots of little features in there that they put in that I think are really interesting, but that I did not never ended up using, you know? Okay, so anyways, I was looking at this thing, who is running in the GOP. Mike Pence is a maybe. Ted Cruz ruled out, and then they got long shots. Ryan Binkley, Dallas area businessman and non-denominational pastor. Yeah, he doesn't stand a chance. Larry Elder, former conservative media personality who first took the plunge when he campaigned to replace California Governor Gavin Newsom. Oh, yes. Okay. So he might be somebody that you could see at a debate, maybe. Asa Hutchinson, U.S. Attorney and Congressman, DEA administration and two-term Arkansas governor. Okay. He's somebody that you might see in a debate. Barry Johnson failed to qualify for the ballot in his last campaign for Michigan governor in 2022. Vivek Ramaswamy. I've been hearing a lot about this guy. Investor and former pharmaceutical company CEO. Is that what he is? I know he's been able to generate a lot of buzz somehow. Kristi Noem is a maybe. I think if she ran, her name might be, she might be. I mean, obviously it's Trump and DeSantis, but I think that there's somebody that they could get. That's somebody that, if those first two don't work out, who gets the second look? Kristi Noem, that could maybe work. Mike Rogers. I don't know about him. He's a radio talk personnel, but he used to be in the House Intelligence Committee. Tim Scott, maybe South Carolina senator. He could do. Whoa. Okay, hold on. I do not hear any news, but that sure shot up there, man. Oh, you're not there anymore, meaning did you cancel the order? Whoa. Okay, so I do not see any news. The last thing that I see on my news squawk is House Minority Leader Jeffries, in case it is necessary to avoid a default, House Democrats will submit a discharge petition on lifting the debt ceiling. I don't think that probably means anything. I didn't get filled. I ain't hanging around. Huh. Well, that's really weird. We just saw 6,000 contracts just shoot in there. The Japanese yen also came in there with it. And I would even say we're seeing along in the rest of the complex like gold. Well, okay, now I'm seeing a big move in oil. I'm seeing movement that suggests Whoa, wait, but Fox News says teenagers would give up the right to vote to keep social media, survey reveals. So they're saying you can either vote or you can use Facebook, and they all choose Facebook. Oi. You know what? I think most people would probably do that because most people feel that their vote doesn't matter because of the area that they live in, right? Like where I live, I pretty much know what the outcome of almost every vote is going to be, and what I do doesn't matter a whole lot. At least certainly on a national level. Kind of figured the day was going to be rangy, so I tried to sell the bottom of the range. I don't get filled, and the little move happens. I'm not waiting for it to come back. Oh, yeah, okay. I mean, this market is moving like that there is some informed trading. And they're staying up there. I don't know, man. I'm just gonna I'm gonna stay on the sideline here. Seems like a high probability of informed trading, but it's still a little bit on the edge, so it may not actually be that. May not actually be that. It could be just a market make. Well, but it seems to me that the treasury is moving. It may just be moving in correlation with the Japanese yen and the dollar. I mean, the dollar fell, you know, since we've been moving up here, you know, the dollar has fallen quite a bit. So we're certainly in a period, though, where we should be searching around for news, because there's a good chance that that's what it is. Okay, well, it's coming back to the 115. I'm still awfully spooked by that. I mean, oil is moving here. Like oil in the last 5 minutes has moved almost $1. Something is definitely happening. Market makers like a good spread. Yeah, and I mean, the market makers can, in some instances, do things like not hold their offers as much so that it kind of generally is more likely to move up, so that, it takes a lot more market orders for it to go down than for it to go up, and the market maker benefits from it going up, and they'll definitely do that. But for it to just like skip up like what 6 ticks all at once, that's not, market makers not doing that. That was like market orders were coming in and hitting the market. It was about 7,000 contracts that came in long, and all of the limit orders were just readjusting themselves. So that is likely to be, I mean, we had some sort of a flow that was triggered by something, and that, from my own read of the market here, there's a high possibility that it's flows that are related to currencies or are affecting currencies. And then the other side is that oil is on a tear, up almost $1 in the past 5 minutes, right? So that all kind of suggests that there could be some informed trading going on. Yeah, see, Forex Live is just posted USD JPY makes a break for it. Price of USD JPY breaks above the 200-day moving average. That could maybe explain some things. Maybe. I'm not quite sure. But the Japanese yen is turning back down again. I definitely appear justified in being wary of it all, right? Otherwise, I would maybe be trying to get a tick out on it reverting back to 115 even a ton. Doesn't, so far it's not really happening. YouTube is taking down content featuring Wagner Mercenary Group. Hmm. And interestingly enough, the level 2 activity after that move is completely died down. So that move up did not really cause a lot of people to get interested in the market. What's with that? S&P is in a bit of chop too, isn't it? I don't know, Kulut. Is that based on like you set some sort of a key level like an opening range, and then you're likely to break the opening range to the downside in these certain conditions on a, when you just look at all days? Because I don't know if this is a situation where a stat like that is useful. I don't know. This is kind of why I hate the do I want to call it like daily statistics, like you could certainly come in and find an edge with like some sort of a Bayesian learning model sort of a thing, right? But the question is, like, if there is a statistical aberration in something, why does it exist? Because if I know why it exists, then I can judge when it's relevant to the current situation, This right now, market, there's a bit of randomness in the market, and like, if there actually is some informed trading out there, then it's not going to matter, right? It's going to move up. Still not sure if there's informed trading though. I'd say it's a higher than average chance, but kind of iffy, especially since it came back to 115 and the activity has kind of died down. I guess we're stuck at, what's the next move when the S&P 500 opens up, I guess. Because we don't have any clear, clear view of like a larger meta order or anything. certainly it's this action is not leading to us having much to work with in the micros, is it? So I did a bit of yard work yesterday. We were throwing sod around, and I think I pushed myself a little bit too hard because I can feel it in like my traps and my neck. Those muscles are all kind of unhappy. It makes my neck sore. USDA considering chocolate milk ban in school cafeterias to combat childhood oh man. They can't get rid of chocolate milk, are you kidding me? Whatever will we do? Oh, that was good. Floss it a little bit. Flossing my neck. Your back gets more messed up sleeping. Well, then you've got the wrong bed. Tell me about it. You know what? They're not perfect, but I have really enjoyed having the air mattress thing. Or sorry, what are these called? Sleep number beds. Because what I have discovered is that there are situations where you want the bed to be a little harder, and there's situations where you want the bed to be a little softer. So if I sleep on my side, I need the bed to be a little bit softer to account for, you know, my shoulder and my hip going into the bed. But if I am sleeping on my back, I want it to be a little bit harder. And so with the sleep number bed, you can adjust it, you know. Now, I don't think it's perfect. I wish that it had more control over, like, there should be, like, individual zones and control the hardness of the individual zones, but... Your office chair is great. Sorted chair. Okay, what is informed trading? So when we say informed trading, we're saying that there are traders that have a piece of information that strongly suggests future flows. So, you know, if there was a piece of breaking news out there that not everybody had access to and they were trading off of that, then we would call that informed trading. So the origin of this term is from Albert Kyle's 1985 paper, which is called like it's something to do with auctions and insider trading. And basically he sets up a model that's like, okay, you have a market maker, and the market maker's just trying to make money from the spread. and you have an informed trader that knows a piece of information that is going to make it so that at 8 o'clock East, 10 o'clock Eastern time, the price of the treasuries will actually be 115.12, let's just say. He knows that for a fact. How much should he buy? How much does that, how many contracts does that guy buy, assuming that he can buy infinite contracts? How many does he buy to maximize his profits? Because if he buys too much, he'll move it further than 12 and then he loses money, right? And so they go through this whole model to find that number. And what we discover is that, orders have impact and that there is an optimal number, and that in order for, an informed trader to be able to take his trade without like tipping off the rest of the market, there has to be a certain amount of noise in the market. And in order for the market maker to make money when dealing with an informed trader, so kind of what it does is, okay, so what is the chances that there is an informed trader? How do I as a market maker account for that possibility of an informed trader and adjust my bids and ask accordingly, right? And in order for him to make money, there needs to be a certain amount of noise in the market. And so there's the noise traders, right? So that's why we call it informed trading. Have you discussed the diverge? So which divergence are you talking about in particular? You may be talking about like cumulative delta divergences, which I don't really pay as much attention to be honest with you. You getting this market buying at 115 even again, but this time it's hitting into an iceberg. You're not aware, then it doesn't matter. There was some weird stuff yesterday. Like in particular, there was a really big bet on the VIX rising in the next 3 months. That's a flow that I caught wind of yesterday. That might matter. I would say that we are back to the kind of market that we had on Monday, where I can potentially make money on it rotating around 115 even, except for that, oil is moving up really strong and we don't know why. And we had this really impulsive move up in the treasury and we don't know why. And so I think that there appears to be enough danger and like rogue impulsive order flows out there for me to not get involved. Or if you're not aware and it matters and you form wrong conclusions, how do we know? Well, we don't know. Well, okay, so if you have like some random stat that doesn't tell you that though, right? Because you don't know if the random stat is just random or if there's actually a reason behind it. And if you can't prove that there's a reason behind it, then you haven't actually helped the problem, right? I mean, the reason I don't like the stat that you put out is because we know something that kind of contradicts it, right? Yeah, empirical evidence. There's one thing we know that kind of contradicts it. And it's not that we know that we're likely to move up or that we're likely to move down, but rather we know that the kind of environment that we are in right now is likely to result in range-bound trading, right? So I'm not so interested right now on a trade that we break the lows or the highs. Not that it can't happen, right? But what my expectation of the flows based on the information that we have suggests that we're going to rotate around 115 even, right? So if I have a piece of information, if I have some random stat that contradicts that, like I'm going to go with what the flows say, right? I don't know. There is something going on though. Look at that, 2 ticks down, pretty unquick succession. In fact, it could be you know, they made the attempt on the upside and there wasn't much follow through for it, so now they're going to test the downside. 1600 at 31.5, 256 at 31, and then 111 at 30.5. You know, that is the beginning of a trend there. It's giving this 3.53 again. So it's tempting, but I will sit on the sidelines here and watch it. Yeah. And the other thing you say, empirical evidence, is the other thing is I would need a bit more information about how the thing works that would tell you that you actually have like a real a stat outside the margin of error. Well, I do miss a lot of trades, but it's better to miss the trades than to be wrong. I think lately I've been missing trades for the wrong reasons. You know, like yesterday I missed a trade is because I just wasn't ready. You know, you don't want to be missing trades because of me. That's been happening too much. Okay, there's definitely some sell flow coming through here because they hit into an iceberg there and then the offer thickened up. So it looks like they're at least gonna trade the 29. 3 orders. Oh, come on. The S&P 500 is kind of having similar problems. Like, look at that at 41.42. I guess another way of putting it, to tie into the conversation we were having just before that, is I want to avoid being the noise trader as much as possible, right? Because if you take a trade and then there's not actually a piece of information that's predicting what the future flows are, and you just happen to end up being right, you know, because of the random oscillation of the market, then you made money as a noise trader, essentially. I don't want to be the noise trader. My goal is to avoid being the noise trader. I want to be in that informed trader category as often as possible. Well, looking at the flows here down at the lows, I'm not seeing a whole lot of behavior that suggests to me like informed trading the other way. So this still looks to me like just regular market making. So they could certainly continue down, but it's not increasing my interest in getting involved. Although I do also kind of feel that given the way that it moved yesterday and the current rates and everything else, that we probably should be kind of favoring the downside, right? Because a lot of the fears and everything that we were having that would maybe lead to reduced rates seem to be dissipating. Don't understand the iceberg. Is it heavy limit orders? Yeah, so an iceberg is a specific type of order that you can submit to the exchange. So the way that it works is like or the way that a lot of these trading platforms work, if you had a professional trading platform, you know, like the ones designed for hedge funds, is like I'd come in and I would put like a bid down in here, right? And then I could right click on it and adjust. Oh, I guess I can't. I forget is it double click? It doesn't pop up. I wanted to come in and adjust the number of lots. Okay, but you'd place your order, and then when you go in to modify the order to say like change the number of lots on it or whatever, there'd be a checkbox that would say refreshing order. And what it would do is it would say, okay, so I have 2,000 contracts that I want to buy, let's say, but I only want to show 500 at a time, right? And what the exchange does is as soon as that 500 is filled, even if it's partially filled, it will immediately bid more to keep it at 500, right? And the exchange does that automatically, which means that you will see volume go into that price, but the number of limit orders won't change, right? The number of limit orders won't change. And that's because there's a refreshing order. Okay, so now this is really turning into something. It's actually about equal in size to the impulsive buy flow that we saw. It could be somebody puking that position and taking a loss on it. So I think I still want to be careful about, you know, this is going to continue. Get on board. No, I wish I could say that. Now, another way that this can play out, because like I said, it's a feature of the exchange, but you could also do it synthetically. You could also say, okay, put 500 contracts out there, and then if some of it gets filled, then add more limit orders until it gets back to 500. And when you see that, you will see like the bid fluctuate a little bit, but you know, generally speaking, it'll be like, hey, there was 1,400 contracts bid, but like 3,000 ended up trading, right? So that means that bids stacked as it was trading into it, right? That's an iceberg, synthetic iceberg. So there was, where was it at? 30. There was this point where, you know, there was a bit of market buying, but it wasn't busting through. They just kept adding more limit offers. The offer just kept stacking. So there probably was a large meta order was trying to sell. And it looks like in this case, you know, there was more. And so we got this little flood to the downside. Now the problem is, okay, so there was a point where maybe if you'd known that order, and probably there's no way for us to have ever known that order was coming, but say you'd known that order was coming, you know, and you could have read that, probably you're getting out here now. Unless there's something that we know that says that there's even more to it, right? Because ultimately the question is, what information do we have that's actually going to effectively predict the flows? And at the moment, we don't have a whole lot. In fact, the information that we have kind of suggests that the flows are going to be kind of iffy and that we might have a hard time getting any kind of real serious trend going. Yeah, well, the fact that when we come over into this treasury, you know? There was this big move up here, and then, you know, we got this big move down that is about equal in size. This really does look like somebody impulsively bought here. They didn't get what they wanted from it, and so then they had to puke it down here and take a loss. That's what it looks like to me. So if that's just the one guy being impulsive or having a trade that didn't work out, that's not something that we're ever going to be very good at being able to predict, right? Because, I mean, hey, there could have been like 5 other guys that might have decided to buy or sell, right? You can't really predict the market from all that. You know, we need to know something more that like, you know, somebody's going to have to buy today because it's the end of the month or whatever. And, you know, that's a big enough order that it's just going to overwhelm anything else that comes through. I guess the other thing I'm seeing though is I'm kind of having flashbacks where it's like I would see a move like that, and so I would probably be short like 29 and like sweating that it's gonna come all the way back in my face, right? That's kind of what I'm seeing at the moment. I kind of always thought of icebergs as algos buying or selling. Well, when I see an iceberg, I'm usually not thinking a whole lot about who is executing that, unless I'm already looking for something and it's in line with what I'm looking for, right? It is true, an iceberg is probably more likely to be like some algo, and it's also more likely to be like something passive, right? So like if I am not placing a bet, I'm just trying to hedge something, and the thing I'm trying to hedge is against the prevailing trend, then yeah, you just use an iceberg. I'm going to get a better execution from using an iceberg, right? But I also know that, you know, the block traders, that they use the icebergs, that they had this thing that was like, okay, I need to buy it. I need to buy X thousand contracts. Current price is 28.5. We quoted to them 115 even, and so I'm assuming that when I buy all of my contracts, that my average price after all that is 115 even. Let's just say, right? But if we start getting a move down, you know, every bit that it moves down, the better that is for me. And there's a certain point at which I've made so much that it just like it doesn't matter anymore. I might as well take all of the fills, right? Instead of waiting for it to go all the way down and then buying it back up or whatever, right? I can just take advantage of the sell flows as it's coming. And so then I would want to use an iceberg there. And so often what they had was like, they would have an iceberg well below or above the current market level, you know, just in case something happened and they got lucky, right? So it's often very difficult to sort out what the icebergs actually, who is actually executing it. Okay. But where I find an iceberg is even more interesting or more useful is that you get these two kinds of ways that these play out. One is that iceberg was part of a bigger order, and so then once the iceberg is exposed, you kind of get this extension like we just had here, right? This all started with iceberging at 30, and then they weren't able to fill that iceberg, and you saw kind of the puke lower, right? So there's that. And then the other thing that I find, but the one that I'm really looking for is, you know, if there's a big iceberg somewhere, that could burn up all of the latent liquidity in that area, right? So that iceberg could potentially create a hole that price gets stuck and comes back to over and over again. So I'm also looking for that reason. In this situation, I don't think that's happened yet, but we kind of have to keep an eye on it. You know, it can only rotate around here at 28 for so long before it becomes a problem, right? Have you ever looked at a book? Yeah, so, you know, I've used it, but I get more information from the DOM. I view Bookmap as mostly, you know, like it's really cool and it's pretty and everything, but it doesn't really give me an advantage over what I've got on the DOM. So okay, well, there does appear to be a little bit of getting stuck at 28, but the orders are still coming in sell. And it does look like, by the way, if you know, I pointed out many times 353 was like the place where I could get involved. I guess I could have made 10 on it. Wouldn't have been too bad. Yeah, there's an iceberg indicator in Bookmap. Well, there's one in Ninja Trader too, right? If you use these charts here, you'll get these little circles. See? These little circles, and those indicate possible icebergs. But like, that's the whole thing. I have this chart. It's pretty similar to what you get in Bookmap. I don't find it very useful, especially not for the treasuries. Yeah, I don't trust the indicators. I just want to see those same numbers hitting the same price again. When will this range in the evening end? Please send help, dude. I'm concerned that it might be a few months, Kevin. So like, we had a couple of headwinds ahead of us, right? Especially the debt ceiling. That's a big stumbling block. Well, the biggest stumbling block to getting a debt ceiling increase was that Joe Biden was unwilling to negotiate. Yesterday, when they asked President Biden about this, he said that you shouldn't really say anything while negotiations are still ongoing. Okay, so essentially, Biden capitulated yesterday. They are negotiating to get a deal that will end the debt limit ceiling, or extend the debt ceiling. Okay, so that's good. That's good. But if we're not going to have any kind of like market panic sort of a thing going on, I'm concerned that the trend will continue to be small ranges, and that we are likely to kind of stay in that environment until like September, you know, unless something else comes along, like a bank blows up or something like that. Well, when we say absorption, right, an iceberg is a type of absorption, right? An iceberg is essentially absorption, where it is all happening from one player. I mean, I don't know. I think that if we were to make a trade, that it would probably still be long rates, short treasuries, on the hopes that there's like another leg to the meta order of whatever it was selling. But here in this situation, I don't have a whole lot to lead me to believe that there will be. So if that's the case, then probably what happens is they just chill at 28. As the market makers are managing the books, I think icebergs are a good way to offload the book. Yeah, kind of depends, but yeah, I do think there's, you know, I often find if there's a range that when you get to the the extremes of that range that you tend to see icebergs. So that could be maybe market makers trying to, you know, well, okay, this is too much. I need to rebalance my book or something. They are kind of testing it. They are kind of testing it. There's a little bit of buying there at 27, stopping it, but it sure seems like they want to touch that 26.5. Do you guys see this this whole thing with Dianne Feinstein and the what was it, the B, you know, this parody site said that, you know, made a comparison between her and Senator Palpatine. I thought that was so effing hilarious. Nice move. Well, the equities are sure puking, huh? Yeah, I mean, 10 points. 10 points. So that's still kind of within the norm for ES. I was kind of leaning on the long side with the, you know, admitting that, hey, it could turn down south. I mean, it sure seems like the ES has been doing that a lot, like, right? Like, it'll have a move down like this and make everybody bearish, and then it will revert all the way back up there and nothing happens, you know? It seems like the market kind of wants to move down. Like the sentiment is still really poor, right? You know, even though it really looks like, let's just assume that this moves a little bit lower. It sure is being troublesome as it does it, right? Yeah, well, the thing that I'm talking more like on the open, so many times in the last week, I'll come over here and be like, wow, that was a really ugly down move in the S&P 500. And then it will magically float right back up and it ends up being nothing. And it happens over and over and over and over again. And it looks like they've got more here to sell, guys. That looks like one that I might be able to grab a tick off of. Let's see. We maybe see some big buyers in the bottom. Why would you say buyers off of that? I mean, something is going on in oil, right? I don't know what it is, but something weird is going on in oil. And this trade looks like it's already fizzling out. I wanted to see it go for that liquidity, and it's not. What time frames? I don't look at time frames. I mean, I have a chart. I have like a 1 minute and a 5 minute chart over here, and I have 30-minute charts, but time frames don't mean shit. You know, I had this guy, one of the more interesting conversations I've had with somebody doing this whole stream thing, and like people will private message me, is this guy said that he worked for a firm of some sort, and what he was doing was he was programming an algorithm that would look at all of the different time frames and look for like correlations or timings and cycles in these time frames in order to select a timing for the beginning of a meta order that would make the least sense within that, essentially, right? So in the view of the markets that I look at and the way that I trade, did that not make sense? Basically, if I'm going to come in and I'm going to buy like a ton of treasuries here, right? When do I start doing it? Well, they were analyzing the different time frames to find the one that would make, you know, the timing that is the most random, essentially, right? Is the most random. So what you're doing, scalping with order flow? I wouldn't call it scalping. I wouldn't call it scalping. So I'm not sitting here and only making my decisions based on what's going on in the DOM. And instead, what I'm doing is I'm creating an estimate for what the flows in that day are going to be ahead of time. And then if I see confirming evidence in the flows that I actually see in the DOM, and or advantageous spots for me to put my orders in, then I'll take the trade, right? So that can lead to these situations like right now. We've had a pretty decent trend. I mean, look, if we had taken it from like the other side, you know, you could have potentially have made almost 40 bucks on this, right? Probably 20 bucks from the spot that I was looking at where I could maybe have seen myself getting involved in. That wouldn't have been bad, right? But I did not have any information that really suggested that we were going to see a flow like that. So I sit on the sidelines, and I continue to see these areas where like there's a lot of liquidity, and I don't know how big this sell is. So I don't know if you can really, I mean, if we got a decent pullback, you know, like if we came back to 27, I might be able to get on board with it, with saying maybe this trend continues. Okay. But the thing that I'm trying to get across is like, I'm not looking for patterns. I'm not looking for, you know, there's some secret pattern behavior to the market where it does this and it does that. From my perspective, based on what we know about the market and how it moves and everything, it suggests that those patterns aren't going to be very useful to you, right? Like if somebody needs to sell 10,000 or you know 30,000 contracts or whatever, they're going to sell the 30,000 contracts. They don't care what it just did. They don't care what it just did. They already sold it to the customer and have to sell it, right? So what you really need to know is, are these guys going to buy or sell, right? You have to predict what they're going to be doing that day, right? How long do you usually stay in a trade? Well, so optimally, I'm going to take a trade like at the beginning of the session and just try and hold it through the session. right? Like if I get a piece of news or something, you know, and I get a really good position off of that news, and I think this is like a real mover, you know, then I could potentially hold it through the whole session. I usually don't hold overnight, but every once in a while I will do that too. But you know, you know, that's like an optimal thing. I want less trades, get more out of the trades. Okay, but like, how do I determine what's my target, right? Well, again, I'm trying to predict the flows. So, you know, like on this move, let's just say that I was able to predict it. Let's say that I came in today and I said, well, I think that there's still a good case to be made. The interest rates need to be higher here. And so we're going to probably continue to see some selling flows here today, right? And I think that we could maybe see 10 to 20K contracts sell during our session on that, right? Well, so far we've already had 10,000 net contracts sell in cumulative delta, right? And we are starting to get this kind of like liquidity whole thing. So what you'll see is like, you won't see a whole lot put on the bid and offer. It crosses a price over and over and over again, and it kind of stays there. It gets stuck for a little bit, right? That's signs of low latent liquidity, right? So if I get to the price, the change in cumulative delta that I'm looking for, and I see that liquidity hole, then I get out. Right, so here right now maybe would be in a spot to have gotten out. It actually kind of looks like this is going to keep going. In fact, now we're starting to get to, oh, not quite. It still has quite a bit to go. I was going to say we're starting to get into some of those crazy prices from yesterday. I get the theory of what you mean, but patterns are just, well, like, so, I feel out of breath. I'm just wondering because I don't trade with DOM data. Well, so I have a series you can go on my channel, and I basically tell you everything that you need to know about the DOM. You watch all, I think there's like 5 videos in the series. You'll know what you need. Yeah. I did not come to this understanding of the market easily, right? Because I very much started out with, from the perspective of, you know, if I can find a pattern and I can trade it, then I'm going to, right? And what I discovered over time was that we're just not equipped with the tools to really do that very effectively, right? Like the number of trades that you need to be able to confirm that there's actually a pattern in something is like, it's insane actually. You know, like sometimes you need tens of thousands of trades, and it's often like in situations where you don't have the data to even properly test it. So there's all these people, they think that they have patterns and they really don't. You're just being fooled by randomness because we're not strict enough with it about what is really a pattern and stuff like that, right? And I tell you, if your pattern is just based purely on price, it's tough, right? To find an actual aberration, it's tough to find an actual aberration. But then like there's this other issue, which is just that like there are patterns, okay, like we're seeing one right now, right? We are seeing a large meta order being executed of some sort, right? Oh my gosh, I don't have my pen up. Come on. G Inc is not cooperating with me. Try restarting it. There we go. Okay. So what is a large meta order, right? We're going to see a move down. It's going to pause and then move down, right? People call this pattern like what? A bull flag, or, you know, a bear trap or whatever, right? Or sorry, it's a bear flag or a bull trap, because the bulls would be like, oh, it's over, and then they get trapped, right? Okay, and with that cumulative delta, we should see consistent selling, consistent market selling, right? This is how block traders trade. As they sell it in waves like this to reduce their impact on the order book, right? Now, every time that you see this pattern, that doesn't mean that that's what's happening. But in this, it's and when you see this pattern, it doesn't predict anything. Like, it doesn't predict that this is going to keep going. It could. There could be a third leg. It looks like it's going to go, right? But it's not predictive. It's like the pattern is the result, right? The thing that you need to predict is before all of that, before you can even see that, right? The pattern is the thing that you're trying to predict, not the thing that you try and make a prediction from, right? And this is where, when you really understand how orders move markets, I think it makes a lot of sense as to why, you know, so many people would think that they see patterns, but then it end up not working, right? Because there's kind of these flawed assumptions about how things work, yeah, right? The way that our, excuse me, man, I feel like my voice is all over the place. The way that we as humans want to think about things is, I see pattern, and that means X thing happens afterwards. It doesn't work that way. You see the pattern, it's too late. That flag pattern is not concrete enough. Well, so the thing that I would see in here, like the thing that I'm really looking for to confirm that that's what it is this strong autocorrelated order flow, right? You'll notice there can be a lot of randomness in price, but the imbalance between market buys and market sells is pretty consistently tilted to market sells, right? And that's what I'm looking for, right? So when I make a trade, generally what I'm saying is, I think this is going to happen. I will get in up in here, and then when I start to see that pattern, then I go, oh yeah, okay, maybe I can jump on it right here. And then I wait until it gets to the changing cumulative delta that I'm looking for, right? Right? Okay, so I saw you mentioned supply and demand here. What was that? Yeah, mine is solely based on technical analysis. Okay. There is liquidity below supply demand zone? It may be extra confirmation for an entry. So the issue that I have with quote unquote supply and demand is, number one, because there was supply in an area before, I don't know why would there be supply in that area again. You know, it's like, okay, somebody decided to buy a ton there, they bought it. Now if it comes back to that area, what, they're going to double down? That doesn't make sense to me, does it? Right? But then the other thing is that, like, people say it's a supply and demand zone, but when you're watching order flow, those areas very rarely end up showing the kind of order flow that I would expect to see in a quote unquote supply and demand zone. Like if I'm seeing a supply and demand zone, right? I see price comes down and then it bounces. And when I'm in this area right here, I'm expecting to see lots of absorption, right? When I look in my DOM, I'm seeing lots of orders are placed. You know, the market orders are hitting into it, but the bids keep stacking, and eventually the bids win, and you know, those market orders switch around and puke or whatever, right? That would be like a supply and demand zone, right? But often what ends up happening actually is it comes down to that spot and nothing really happens, and there's not really a whole lot of volume that trades down there, and then it comes back up, right? Like, how often is it that when you see, if you were just watching volume, because I know some of you might not be watching order flow, right? But if you're just watching volume, how often is it that you see something like this where it comes down and you're looking at the volume and actually it's like the volume is really light there, right? Does that actually supply? No, like nobody actually traded it down there. You go and you look at the volume profile, only a few contracts traded there, you know? That's not supply. Supply would be like a ton of contracts traded there and then it moved, right? So what I find actually is happening most of the time is there is a correlation, right? The market makers are adjusting their bids and offers based on a correlated instrument, and that instrument was moving and then it turned around, and so this one turned around. And, you know, it kind of goes within this range based on the correlated instruments. And that's what creates these, you know, these zones like this that these guys are looking for, that they consider supply and demand. It's not really supply and demand. It's just the edges of the correlation, right? Right. If there's imbalance below that zone. So now moving on to smart money concepts. Smart money concepts is a bunch of bullshit. It's a theory that is designed to appeal to beginning retail traders, to make people feel smart, but there is absolutely no substance behind it whatsoever. There's no evidence that the things they say are going on under the covers are happening at all, right? And a lot of what they're saying doesn't make sense. Again, so most of these people, they don't understand order flow, so they don't understand, why does price move? It's because of the orders. If we're going to tick up and there's 12,000 contracts on the offer, you know, you're going to have 12,000 market orders to push through that, or to whatever the deal is, right? Okay, so if you are a market maker and you're going to manipulate the market, quote unquote, right? What are you going to do? You're going to come through with market orders and push through it, and then what? Now you've bought a ton, and actually you want to be short. So now you're going to have to sell them, and it's going to move things just back down, and you're going to like net lose money, right? The only way that works is like you moved it up past the point at which so much more volume comes in after you, chasing you, that you're able to turn around and fill and take it the other way, right? And they're saying that you know, that's like a rare situation where you're able to get away with that, right? And the smart money concept guys are saying that's like the most dominant factor in the market, chooses how things move and stuff. Like it's nonsense, right? And I actually did a bit of back testing. So I think that the most famous smart money concepts setup that I see, because there's lots of YouTubers saying here's the setup, right? Is that they say you have a high and you see it, it's coming down, and then it comes up and it breaks that high, right? And then what you will see is that's like a false breakout, and it's going to come down to here. Oops. It's going to come down to here and break the structure from before the move. Then it's going to come back up here to somewhere. And there's going to be an area in here where there's a fair value gap, is what they call it. So it's going to come back to here, and then it goes lower. And you want to get it somewhere in here, right? That's like the most common smart money concept setup. I backtested this setup, and the interesting result was that for most of the 5-year period that I looked at it, it was random. Didn't appear to work at all. And then in 2020, there was a period where it did really, really well. And then in 2021, which was around the time when both there was a regime change shift in the market, but also when smart money concepts became a viral phenomenon on YouTube, the strategy stopped working. Which suggests to me That the only reason it was working in the first place was because so many people were trading it. And once it became too popular, it blew up the trade. Right? So now, there is one thing that we know does happen, and that is that if you exhaust all of the liquidity in a location, it can make it difficult to move away from that location. You're seeing it start to happen at 25.5, right? And you can end up with this thing where, you know, if it tries to move down, it snaps right back to it. If it tries to move up, it snaps right back to it. And you'll see it do this over and over again, right? Let me point it out on a chart, because on a chart you can see it's very clear, right? On a chart of the treasury, you can see it very clearly, right? Here, right? In fact, on this one, it was even before that, right? You had the news happened, and then it kind of formed one of those ranges, and then what happened? There was like this breakout move, and then it came right back to it, right? You'll see it happen over and over and over again. In this one right here, if the meta order is done, which honestly, I mean, look at the volume here. It looks like it might be done, right? What's the most likely thing to happen? It's for us to come back to 28. Area of low listing, because what ends up happening is there's not a lot of liquidity here. There's a lot of buy liquidity here and a lot of sell liquidity here. And so it kind of shoves it into the center. It's like a hole. It's like you got a hole here like this of liquidity, right? And they will just fall back into the hole because of gravity. Another way of putting this, the way that really made this click for me, is price tends to resolve where supply and demand are at their minimum, right? Another way that you can look at this is like when we have news, for instance, right? When we have news, you'll have a move really strong through low liquidity, right? And then what always happens after the news move, right? It sucks right back up, right? Because there's this huge area of like no liquidity behind it that sucks you up like a vacuum. It's a liquidity hole, okay? Yes, price can react to low volume or no volume. So one thing could be that the liquidity pulled because of informed trading or news or whatever, right? But another thing could be a correlated asset, right? The bids and offers changed because of the correlated asset and not because of volume. Right. Retail traders don't influence the market that much. They do, actually. So as popular of a strategy as the smart money concept thing has become on YouTube, it is absolutely that's worth millions of dollars, man. That's millions of dollars in retail trades that you can mess up, right? But the thing is that if you are taking the smart money concept view of the markets, which is the reason this is happening is because the smart money out there is trying to screw you all over, right? I could understand why you would want to come at, why that would seem comforting to you, that I'm too small to really matter, etc., etc. It's actually maybe kind of contradictory in some respects, right? Because they're all saying that they do this to screw over the retail traders, but then the retail traders don't matter. Or, I don't know, but I digress. It happens because of the structure of the market. Happens because of the structure of the market. If you trade something, it moves the market. And if too many people are trading it, it moves the market too much and eliminates the edge in it, right? Their algorithms out there will start trading against it, just that because the market is so statistically efficient. And so the end result is any kind of pattern that you end up finding out there, if it becomes too popular, the pattern will disappear from people trading it. And we would say, retail traders don't matter that much. Well, sure, because I'm one lot and there's like 2,000 lots at every price level and everything, right? But the thing that you have to understand is that orders have a very strong impact. Okay. So if you take $1, you take it out of bonds and you put it into the stock market. Okay. You would think, okay, I put $1 into the stock market, it will increase the market cap of the stock market by $1, right? But we have proven empirically from studies, you go and read the inelastic market hypothesis by Gabiax and Quajan, and they found that putting $1 into the stock market moved the market cap of the market $5 to $8, right? So what am I saying? You retail traders, your one lot is 5 times more powerful than you think it is. And then you times that by hundreds of thousands of orders coming of other people trading the same thing. Yes, it does have impact. In a market where nothing else is going on and it's just statistical noise, yeah, it does matter. With the right rules in place, it does work. I mean, I back tested it. It doesn't. The thing that drives me, that I think is so funny about the smart money concepts, is that it's designed to not be back testable. And the retail traders that learned it, they don't, because they're not in on the scam, I guess. They tried to systematize it, right? So they systematized it, but they didn't have the skills to actually properly backtest it. So you got all of these guys on YouTube, and they're like, "Well, I backtested it here. Let's just go on a chart, okay? So here I see one. Here's the structure and everything, and then look, and you see it worked out." And then they just keep scrolling back on the chart and that's not backtesting, guys. It's not. Backtesting has to be like systematic. Which means being able to objectively identify every time that setup has happened over the past like 5 years. So you have to program it. So I'm a programmer. I can program it. I programmed it. Doesn't work. And yeah. Well, I mean, microstructure kind of suggests that there were some things in the smart money concepts that maybe they picked up on, right? Because I just, it seems like every school of trading kind of comes back to it in one way or another, which is that, the market will tend to move and then it'll kind of do nothing. And then it will tend to move and then it'll do nothing, right? Everybody picked up on this. And they came up for all of these explanations of why. It wasn't until 2015 or something like that we got the empirical evidence that kind of suggested why this happens. And once you understand why this happens, it just destroys a lot of these other theories about what's going on there. And it gives you a framework that I think is a lot more effective at predicting what's going to happen. Although it's also, the prediction that you can make is a lot more limited, right? Because what does it tell you is, we're not going to be going anywhere for a bit. Does DOM trading also work on Bitcoin? Yes. So the stylized behaviors of order flow occur because of the use of a limit order book. So any market that you're using that uses a limit order book, you will see these behaviors. However, I wouldn't recommend trading Bitcoin because the issue in Bitcoin is that it's very difficult, if not impossible, to be the informed trader. And there is noise out there from whales that is so massive that it just cancels out any kind of predictive edge that you have, right? Like you're sitting here and one idiot living over in Singapore, you know, on a whim for no reason at all decides to sell some Bitcoin and push it down on you. And that's going to destroy weeks of profits. And there's literally nothing you can do to predict or see it, right? Really tough to be successful in trading under those circumstances. And the only way I could see myself getting involved in the cryptocurrency market in that way is if you were doing automated market making strategies. Yeah, I think that's because people are attributing their own explanations, which mainly revolve around manipulation from the global banks. Yes. Perhaps because we want an adversary to our struggle instead of it being math. Yum. And, well, and I think it's also, I think it's because it fits into the story that people want to tell themselves, right? So our story really is one of, you're a weirdo that just loves the market and you hit your head against it over and over and over again until you finally figure it out. Not through virtue of your own smarts or anything like that, but because you were just persistent. And it's not even because you have like a dedicated work ethic or anything like that. It's because we just can't help it because it's so darned interesting, right? That's the story of somebody that I think ends up having successful kind of doing this short-term trading, intraday day trading as a retail trader, right? That's not what people want to tell you. I mean, it's not, you know, as I tell the story, you know, this is very attractive. Well, basically I'm saying we're all autistic, and, you know, you're not autistic, but you have an intense interest in something, and it's kind of bizarre and non-logical to put that much effort into it, right? That's not what people want to tell themselves. The story that people want to tell is, I am so smart and brilliant and better than all other people, and so I came into this market and, you know, just from my pure talent was able to sort out the mysteries of the markets, outsmart the markets, and make money from it, right? So this story that they tell with smart money concepts fits into that narrative so well, right? So I discovered that actually what's going on is the market makers are trying to screw everybody over all of the time with this certain kind of unintuitive pattern, but it wasn't unintuitive to me. I figured it out, and then I, you know, traded and I became a millionaire from it. And now you can become a millionaire from trading this same pattern too, right? That's the story people want to tell themselves. That's why it becomes so popular. And that's why, by the way, Smart Money Concepts ends up being just like a remix of so many concepts before it relating to price action. Is just with like different terminology. Like you'll see it come up over and over again, not because it works. Because if it works, a lot more retail traders would be successful. It's the most popular trade. You know, I did a survey like 3 years ago now. What, you know, looking at what were people trading, and price action was by far the most popular. It was like a 60% sort of a thing, right? So if it really worked, there'd be a lot more profitable traders, right? No, it comes back because it's what people want to hear. Back to correlations. I've seen that stocks and bonds move together, and bonds lead stocks, but in crisis, crashes, or bullish stock market, they tend to diverge. Am I correct? I would say when it is the market expecting the Federal Reserve to the market thinks that they're going to move the Federal Reserve, that's when you see the divergence. And when it's the Federal Reserve moving the market, they tend to be correlated, right? So like if the news event is the Federal Reserve just did a surprise interest rate cut, right? Buy all the things. They're going to be correlated. Buy all the things, right? The Federal Reserve is making money easy. So you're going to buy the treasuries, you're going to buy equities, right? But if it's the other side, if it's the retail sales number that we just got was really good, and it's good for the economy. The economy looks strong, and the economy looks likely to continue getting strong, and this is good for stocks. Then it's going to be buy stocks, sell treasuries, right? Because you're expecting, the market will continue to do well, but it's also the success of the economy is going to force the Federal Reserve to increase interest rates, right? But generally speaking, the way that I would approach it is like list out different types of environments, right? There's an environment that's being dominated by loose money policy, right? What does that look like? There's a market that's dominated by inflation and interest rates rising, which is the one that we've seen the past year, right? What does that look like? And sort the things out that way, because every situation is different, right? No, they don't. It doesn't make sense, because show me somebody that has actually done a real back test on any of these smart money concepts, right? Like what I want to see is a algorithm that I can run over 5 years of data that shows the profitability of a certain trade. I haven't seen it. The smart money concepts, people think that back testing is like looking back on a chart and, pointing out the situations where you thought it would have worked well. This is not objective. Yeah. Well, hence the reason traders fail at these concepts. Which line they ask, which array, which pattern they can't tell you. Yeah. So this is why price levels are so darned popular, right? Because I can sit down and I can say, oh yeah, you just trade support and resistance, and I can come back and I can look at a chart and I can tell you, okay, like look over here. Oh, here's support. Here's support and here's resistance, right? You buy here, you sell here, and then this time it didn't work, whatever. But maybe it comes back up to it. If it comes back up above that line, they'll say, look, see, it's still acted as support. Right. And then I'll come into another day. Then I'll say, oh, okay, that makes sense. Support and resistance. Okay. Can I move back and look at another day? Okay. Support and resistance. Okay. Resistance. Support. Okay. And then we move it over and oh, whoops, it broke like both sides of it. What happened? Oh, well, Seth, that's not where support and resistance actually were. You need to zoom out. And then you can see that actually support was here. Or something like, resistance was here, right? Like, okay, give me an algorithm that objectively defines where support and resistance is, and which accurately defines when support and resistance has been broken, because that's the other one is like, well, okay, here's resistance, but it only went one tick away, so it was resistance still, because even though it went 2 ticks, okay, so like what if it goes 4 ticks through it, then is it not, or 6, or like come up with an objective measure and then backtest it and show me the results of that. Because the thing is that when you start to do all of those things, you realize it doesn't work. In fact, another funny thing about smart money concepts that I found is that they set so many conditions for their entries that they rarely happen, actually. They're very, very specific setups. that it maybe happen every other day or maybe once a week even, right? And so then it's like, if you go and you look at it 5 years, well, maybe the chart seems kind of random, but like you don't actually have enough trades to really have a statistical, you know, to have results that are beyond the margin of error anyways, because it's like too rare. These are concepts. Well, but no. So hold up. If I can do a setup, right, and I backtest every time that it happens, right, and I come up with a statistical result, and that statistical result says it's not profitable, why would I think that there's any edge behind it at all, right? So what you're telling me now is you have to rely that your understanding and this whole theory and framework of doing things is actually correct, and you can use it to make money even if the actual objective technical setup of it all doesn't actually work. But if you combine it with other stuff or something, then it will end up working. But you can't actually prove to me that there's anything to the actual setup. That's very different from what I'm coming in here and saying, right? Okay. So for instance, the market tends to follow a square root law, right? And that's why you see this behavior where it's like, you'll see a move and it kind of like slows down. And then if they're going to do another leg, it'll kind of do it again, right? You'll see this pattern over and over and over again. Okay. That square root law applies basically 100% of the time. Like every study that they've ever done on this particular thing, that the impact of large meta orders tends to follow a square root law, it's been replicated over and over and over again, and it always applies anytime that there is a limit order book, right? There's real statistical evidence backing up the things I'm telling you. Why is it? I don't understand. Why is it that everybody is more interested in something that a charlatan on YouTube? I can't help myself, man. I'm so ADHD. I can't help myself. But here's the other thing: is the guy that made smart money concepts popular is full of shit. He's a complete idiot. This guy, he was like, when he was a teenager, got on baby pips and started claiming that he was this amazing trader and he was making all this money, and everybody made fun of him because he was clearly an idiot. And so then he started doing one of those accounts where you can like see the results of it every day, and he like almost immediately blew the account and became a laughing stock, so much so that he couldn't make money from his program anymore doing forex anymore. And so he moved over to the futures area where he wasn't well known anymore. And then through his YouTube channel, he just like somehow happened to get popular, right? This is the person that basically originated all of these smart money concepts like became popular. Why do people trust that and not all of this research that is happening at universities that conclusively proves some things for us about the market? I don't get it. It is the craziest mystery to me. He uses such dude. The guy is a chronic narcissist. That's the other thing, is like, listen to what I talk about, right? How much time do I actually spend talking about myself, right? Because when we talk about Seth, we're usually talking about where Seth's deficiencies are and where Seth's goals are, and what is it that we got to do and adjust to try and do better, right? You go and watch these other gurus, man, and all they just talk about is how great they are. And it's like, you go and you watch a video and it's like a 2-hour video or something, right? And all he actually tells you about the thing is that setup that I showed you, where, you know, it breaks a previous high and then comes back and breaks the structure below it. Sort of that, like, that's the setup. 2 hours, right? And like 90 minutes of that is him yammering on about how great he is. Oh my gosh. How great he is and how great his program and his trading program is and all. It's just self-promotion. It's chronic narcissist. And whereas Seth is like one of the least narcissistic people that you can meet because he's ADHD. Right? What's the metablock study? Oh, okay. So if you really want to get into this again, I would recommend you watch my order flow video series. And like the last 2 videos is where we really talk about it. So because I'm kind of mentioning a couple of different stylized behaviors that we see. If you want just a study about the square root law, okay, that's really good. Look for a million meta order analysis of Bitcoin. And this study is significant because it shows that it really is the order book that causes this behavior and that it still occurs in the Bitcoin market. And it's also significant because they basically got every order placed on that exchange in that time period on Mt. Gox, like at the height of Mt. Gox. So they were able to reconstruct all of the meta orders and see the impact that they had, which means that you got to study a lot of meta orders and the impacts that they had, right? And they show very clearly the square root law, and they go through the equation. The equation that you want to see is y omega times the square root of the size of the meta order over v. That's the formula that defines the impact of large meta orders. Change in price equals y omega times the square root of q over v. No, they don't. The concepts themselves can be back tested and duplicate, but they don't. I'm telling you, I back tested it and it did not do that. Okay, so one could say, well, maybe Seth sucks at back testing. Well, I'm sad that you have so little confidence in me, but that's okay. Show me a back test. Show me a back test that shows me that this setup actually does happen with a high probability. Has any smart money person explained why price returns to a place in a fair value gap? Because the microstructure does so mathematically. No, I could tell you exactly. In fact, I'm going to make a video and I'm even going to like give you the code for the strategy. But the specific setup that I back tested was when you have a high and you breach the high and then immediately come and break the structure from before the high and then return back up to a fair value gap. And you take it short here and it will go down like that. That's the trade that I back tested. If I'm wanting to use Sierra with Rhythmic, what am I connecting to exactly? Do I connect my live account to both Rhythmic and Nelly? What are the other connections here? Okay, so so if you're running Sierra charts and you're using Denali data, and then you also have Jigsaw and Rhythmic data, right? Then you would just do them separately. But what you just realize that you're supposed to pay the professional fee because you have two connections. He was not trading that way in 2011. He is better now. He got paid educators via his cult, so he should have gotten somewhat better. Well, the Andre, the workaround to not having to pay professional is to share the same connection between multiple applications. Right. So, like, I connect NinjaTrader to, what is the name of their data feed again? I don't know, but I connect NinjaTrader to the data, and then NinjaTrader forwards that data to Jigsaw. Right? Only one connection. Or I connect to Rhythmic Trader Pro, and Rhythmic Trader Pro forwards my data to Jigsaw and NinjaTrader. Still only one connection, right? But once you're paying for two different data providers, now you're a professional. Right? So my recommendation would be to pick one. If you really like Sierra Charts, then just use Sierra Charts and use Sierra Charts DOM. It's fine. It's not as good as Jigsaw's, but it gets the job done. And similarly, if you like Jigsaw, then just use Jigsaw with Rhythmic and use Jigsaw's charts, which, you know, aren't perfect, but again, get the job done. Just pick one of those two platforms and just, you know, fully commit yourself to using that one platform. Yeah. There are Forex guys who teach smart money and manipulation, 3 price pushes and then a reversal, and that is literally, yeah. The market microstructure can explain it, but then it also would explain why, like, it explains why you see the pattern, but it doesn't give you something predictive to, you know, be able to see the pattern, right? I was afraid I'd have to, yeah, I'm sorry. I wish I had answered the question better yesterday when you asked. It's been a busy day. I've been yammering a lot, haven't I? Excuse me. Why is the volatility dead these days? Oh man, Axelrod, so I think that there's a couple of things going on leading to that, but one of the things is that the summer just tends to be quiet anyways, and often you will see them start to clamp down on that early, which is what happened this time, and so you start seeing it from even the beginning of May, you know. There's also this thing where it's like we had some volatility and then that resolved it, and so they immediately clamped down on the volatility, right? And the thing is that there's kind of like a reflexivity loop in it. Once volatility starts to get tight, the traders are very incentivized to sell volatility. You know, like the trade that makes sense in this environment is go to VIX futures and just go short, right? And because I remember last time this happened when I first started the stream in 2017, and there was some guys that were doing that, and they just made out like bandits every freaking day. You know, you just short the VIX, and then you wait for there to be a little pop at the beginning of the day, and then just go short, and you'd make tons of money every day. And you know, eventually the VIX went crazy, and then they lost it all, but in the meantime, and so that it makes it really hard. I got to tell you, man, I was born, you know, when I first really started doing futures trading was in 2017, when the VIX was much lower than it is now. We're on the precipice of going down back into those low levels, like what, below 16 or whatever it is, right? Like it is as low as 10. It's brutal. It's brutal. It's really, really difficult for retail traders. And not many people wanted to trade during those times either. Trading was not popular back then, right? I was like the only guy on YouTube that was willing to come and like live trade. was stupid enough to come in and live trade on a stream, right? It wasn't like 2020 and everybody and their dog all of a sudden wanted to do it. I find it really hard to read the market. Well, yeah, because there's nothing to read, right? It's like, it's just noise. It's just the market oscillating in noise from the market makers providing liquidity and no actual real trading going on. Yeah. And the play on these things, I mean, I guess it kind of worked out in this instance. I don't know if it was a very good one, but you know, the play in these situations is wait for them to reach the extent of their impact where you start to get the liquidity hole, and then reverse it on it going back to the liquidity hole from earlier, which would be, you know, 28 or whatever. Right? But that's the play. It's hard. It sucks. It really, really sucks. Yeah, if you send me a checklist for entries, and I can backtest it. As long as you really have like testable setups. I think a lot of people, when you do this exercise, they realize that the things that they thought were like objective entry criteria are not actually as objective as they thought, especially when it involves support and resistance, right? Like if you say it crosses this line, then you have to be able to objectively define where that line is going to be, right? Yeah, there are a lot of magicians in the training guru spear misdirection, possible outcomes. No one has revealed a cause and effect system that is objective and not discretionary. Yeah. Oh, for sure. I've never seen anybody, well, you know, I have seen some people on YouTube that say, oh, here's this automated strategy that you can use. And what ends up happening with those guys is they're making some mistakes and they're backtesting and don't realize it. Or maybe they do know it and they're hoping their audience won't notice. I made a video about that, right? If you go into my, you know, it wasn't even that many videos ago. There's one about responding to Daniel Inskeep because he did a review of a service, and he did say like it wasn't good service, but I explained how that guru was fooling people with their back tests. So if you want to go watch that, you can go watch that video. It's not my most popular video, but I still enjoyed doing it. Well, so if you, yeah, I'm a programmer. I have a day job. In fact, I'm going to be shutting the stream down here soon and going to do the day job. I'm a site reliability engineer for my day job, which is, you keep the websites up. It's actually like a really high paying job right now because you don't have a lot of people that have the breadth of knowledge to do it. But yeah, and I've done a lot of development, and if you sent me stuff and I backtested it, I really hate backtest because you know, it always ends up the same. But for the smart money concepts, I'm willing to do it because I want to make a video about it. And the more of these setups that I have that I can show the problems with them, the better, right? But yeah, I program it in NinjaTrader, so I just do it in C#. All right, well, I wonder, you know, going back to the flows for today in the treasury and everything. Oh man, this is kind of a little bit bizarre actually now. I really do wonder if this was not a somebody came in and did something impulsive buying here and then they had to puke it, and they did so in 2 waves, right? Now though, the cumulative delta is higher. So what does that tell me? Oops. Oh, you know what? I wasn't even looking at the right. Now we've got now it's a little better. That's what I was expecting to see. Okay. They bought here, and then they had to puke it. And then there was a second wave. Okay, so the way that this is going, actually, maybe there could be some further downside today. Because the correlation since here, it has been selling, right? So now I would favor the downside. But it doesn't look to me like there's actually enough of something going on here to really be worth trading. And I'm okay with having not caught any of this, because we didn't really have any information to suggest it was going to happen. So, so you can email me speculatorseth@protonmail.com and write it out like that. But I got to get going. So I will see you guys tomorrow, Thursday. In the meantime,